Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SCIENTECH Medical Technology, Shanghai Co. Limited, Annual Report. SCIENTECH Medical Technology, Shanghai Co. Limited, offers a diverse range of medical products and services. The company's primary focus is on the manufacture and sale of interventional treatment series occluders for defective congenital heart disease, which includes various types of occluder products such as atrial septal defect, ventricular septal defect, patent ductus arteriosus, and others. In addition to occluder products, SCIENTECH also develops and manufactures heart valve medical devices. The company's product portfolio includes mechanical circulatory support products, hypertensive device treatment products, and interatrial shunt devices. Furthermore, it offers procedural accessories for atrial septal puncture and other related services. The company operates through a combination of distributors and direct sales channels to reach its customers. Its business activities also encompass manufacturing, technology development, and trading. With its headquarters in Shanghai, China, SCIENTECH Medical Technology, Shanghai Co. Limited, is a subsidiary of Lepu Medical Technology, Beijing Co. Limited. SCIENTECH Medical Technology, Shanghai Co. Limited, maintains a market capitalization of $5 billion, broadly in line with the industry peer group. SCIENTECH Medical Technology, Shanghai Co. Limited, trades at a lower price-to-earnings ratio of 15 times and a higher price-to-book ratio of 2.06 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 4% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 4.15%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline are multifaceted and influenced by a range of factors. Revenue growth drivers. The company's revenue has been driven by the successful commercialization of its LAA occluder and PFO occluder products, as well as the rapid growth in PFO surgeries. The widespread attention and high popularity of biodegradable technology products have also contributed to revenue growth. Furthermore, excellent sales results from new product launches, such as the Cyan Crown product, have boosted revenue. Additionally, the company's expansion into new markets, including China, has been a significant driver of revenue growth. The development of new products, such as transcatheter aortic valve systems and transapical mitral valve clip systems, has also contributed to revenue growth. The launch of new products, including RF-Lance radiofrequency puncture devices and biodegradable LAA occluder delivery systems, has further increased revenue. Moreover, the company's increasing commercialization level of occluder products, as well as its expansion into incremental markets, have driven revenue growth. Revenue decline drivers. On the other hand, the company's revenue has declined due to several factors. The centralized volume-based procurement of medical consumables by Fujian Provincial Healthcare Security Bureau has affected distributors' stock replenishment and impacted occluder business performance. Additionally, a slight decrease in third-generation Memosorb biodegradable PFO occluder product sales has contributed to revenue decline. The company's increased raw materials and consumables costs, labor costs, amortization of intangible assets, utilities and office expenses, taxes and surcharges, and selling expenses have also driven revenue decline. However, it is worth noting that some of these factors, such as the increase in transportation costs, have actually decreased revenue. Overall, the company's revenue growth or decline is influenced by a range of factors, including product commercialization, market expansion, new product development, and changes in costs and expenses. The company's financial performance indicates a significant milestone. It is now generating positive operating cash flow. This achievement signifies that the business is capable of producing more cash than it consumes, allowing for investments in growth initiatives and debt repayment. The shift towards positive operating cash flow demonstrates improved operational efficiency and effective management of resources. As a result, the company's financial stability and sustainability have been enhanced, positioning it for future success. The company's debt level has remained relatively stable over the past year, with a slight increase from 194 million RMB in 2024 to 266 million RMB in 2025. However, interest expenses have shown a more significant change. While not explicitly mentioned as changed significantly on page 16, further analysis reveals that there may be a decrease due to a reduction in long-term borrowings and total liabilities. This trend is confirmed by the data on page 24, which shows a substantial decrease in interest expenses from -23.9 million RMB in 2024 to -14.6 million RMB in 2025. Management is optimistic about the company's future prospects in the heart valve product market. They plan to continue innovating and launching new products to stay ahead in the industry. Key strategies include focusing on safe and effective medical solutions, exploring new technologies for structural heart diseases, promoting innovation in design, materials, and production processes, expanding into incremental markets, and enhancing interaction with surgeons. The company aims to satisfy its liquidity requirements through operating cash flows and capital market funding. To achieve this goal, management plans to utilize the net proceeds from listing, totaling HK $567.3 million, for various activities such as research and development, sales and marketing, production capacity expansion, strategic investments and acquisitions, and working capital and general corporate purposes. Management's emphasis on innovation and expansion is evident in their strategies, which aim to improve product design, materials, and production processes while also exploring new markets and technologies. By focusing on safe and effective medical solutions, the company aims to establish itself as a leader in the industry. The company has a history of paying dividends to its shareholders, demonstrating its commitment to rewarding investors for their loyalty. In recent years, the company declared dividends in both 2024 and 2025, with a total dividend amount of approximately RM 173.375 million. This indicates that the company is financially stable and able to distribute a significant portion of its profits to its shareholders. The dividend payout per share was set at RM 0.5 for each year, providing a clear indication of the company's intention to reward its investors. The fact that dividends were declared in consecutive years suggests a consistent approach to shareholder returns, which is likely to be attractive to long-term investors seeking stable income streams. There are indeed concerns about inventory buildup. According to the extracted summary, page 14 explicitly states that there is a concern about inventory buildup with a clear yes indication. This suggests that the current state of inventory management is not optimal and may be leading to potential issues. However, it appears that efforts are being made to address this issue. Page 33 shows a significant decrease in finished goods and work-in-process inventories, indicating an attempt to reduce inventory buildup. While this is a positive step towards mitigating the problem, it also highlights the need for continued vigilance and improvement in inventory management practices. That concludes the financial summary for SCIENTECH Medical Technology, Shanghai Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.